Hi business creators, it's Claire from Claire, and today I'm going to be talking about a fundamental problem when allocating cash in your business using one of those percentage methods. Now, cash flow is king. I don't think anybody would argue with that statement. It's a cardinal rule of business finance. It's also a cardinal rule of personal finance because I believe there will be a problem if you don't have the cash to pay your rent or mortgage or utilities. But whether you're using this percentage method for your business or for your personal life, there's a problem that is often overlooked when we simply apply a percentage to manage our cash. Now, the truth is, there's this assumption that just underlies these methods, and that assumption is that there is always enough to pay for the essentials. And I'm going to explain this a little bit further, but first, what am I talking about? Cash management methods. So effectively, I'm not going to name names because it's a philosophy that underpins most of these budgeting cash management methods, but you set a percentage and you allocate that percentage to certain purposes. So you take your income, potentially profit depending on how you do it, and then you say 10% of that goes to business expenses, 25% to taxes, 10% to superannuation, 5% to profit, and the last 50% to salary. So the example of this, if you make $2,000 in the month, or if you receive $2,000 in cash, then you allocate that across the different budgets, whether you call them accounts, jars, envelopes, pots, buckets, whatever it is. They're kind of all the same methodology. They're all the same premise underneath it. So if we take those example percentages, your $2,000 is allocated 10% to business expenses, $200, 25% to taxes, $450, 10% to superannuation, $200 again, 5% to profit, $100, and then 50% to salary, $1,000. Now, I'm not really going to go into the order in which these are allocated at this point because it's a fixed percentage. You distribute 100% of it across these different purposes. So if we have 50% of that going to salary, and that gives us $1,000 salary for the month, what happens if you need $1,450 or $1,250 or $4,000 to cover your monthly living expenses, like the essentials, like food and housing? What happens is we have to start dipping into the other pots, the other buckets, the other jars, and that percentage that we spent so long working out pretty much just goes out of the window. So the assumption the method is based on is that there's always enough coming in to cover those essentials at that allocated percentage. So 50% of what comes in will always be enough to pay for my housing, utilities, whatever your essentials are. Now, if you have a fixed salary, then yeah, that might be fine because you know what you're working with. So you can increase or decrease that salary percentage to cover your essentials. But I'm pretty sure all sole traders know we really don't get a fixed income. There's lots of cycles, ups and downs, peaks and troughs. So what this leads on to this assumption is that everything is an equal priority. Your business expenses are an equal priority to superannuation, equal priority to your personal expenses. But in reality, some things, some expenses simply need to be paid before other expenses. Now, we could probably argue whether food is more important than housing, but I'm sure we would both agree that both are more important than new shoes. And there's a certain order things have to be covered in. Things like superannuation, yes, it's great, but it's not essential. Heating, power, and food are way more essential than superannuation. If you can't afford to live, I would suggest you can't afford to pay into your superannuation. They are simply not equal priority. So when we just apply this fixed percentage, we treat everything as if it was equal, and it's simply not. There is an order to your expenses and the priority, and often actually for sole traders it's the personal expenses that are more important than the business expenses. Now, I know there will be an argument of the certain tools of the trade, things that you need to pay for to actually be able to run your business and earn an income. Totally agree. but you want to keep those as low as possible because the less you spend, the more profitable your business is. So I'm going to put that aside because the answer that comes up for a lot, well, even if I don't have enough this month, I've got a contingency. I can save a contingency fund for the leaner times. But again, that's based on the assumption that at some point there is more than enough coming in, enough for you to build a contingency, or you have invested and put money, your own personal money, into creating that contingency. And it's also on the assumption that this dip, this lean time, is only short-lived before returning to having enough coming in, and you can fill those coffers up once more. It's just not true, and it's particularly not true for sole traders, and I'd suggest it's not true for most businesses. Most businesses do not run on there is always enough money coming in. So my alternative, now I've been using this a particular percentage allocation method that I've talked about in the past since I think April 2019, and it worked for me because I did have enough coming in and my spouse works full time. And for the longest time I thought that was fine, but then recently a couple of things have happened that have put a question mark over that assumption there will always be enough. Now I'm not saying things aren't working out, but I just questioned the assumption. I was like, well, what if there's not enough? Like, it really just shook the foundation of this whole method for me. So I reinvented, I put my finance cap on, how I manage my business cash, allocating it to the appropriate priorities. So the first priority for me, taxes. I can't really not pay taxes. It's an absolute non-negotiable, something that sole traders in business should be dealing with. And I calculate how much I need to put into taxes on a month-to-month basis. Yes, it is possible to estimate it on a month-to-month basis. My second priority are personal essentials: housing, groceries, pet food, insurance. You know those things, you just have to pay. My third priority is actually superannuation, because saving for retirement is important to me. I take this business seriously. This is my employment, and if I was with an employer, I would be expecting them to pay superannuation. After taxes, living and superannuation, I come into household extras, things like gifts, giving, holidays, a little bit of house shopping in there. That kind of not quite essential, but not totally discretionary. Fifth is saving, business expenses and personal extras, and that's 3 separate categories, and they all receive equal priority. And if there's enough, 20% goes into savings of whatever that total is, business expenses, things like bookkeeping software, memberships, equipment, mindset support, that sort of thing, and then personal items, clothing, shoes, books and crafts get allocated an amount of what's left based on what I would say the budget is. And then last, but certainly not least, but the least important priority is fun and investing, because if all of the other things are covered off, I've already covered savings, I've already covered superannuation, taxes, all my business expenses, all my personal discretionary spending, then there's no rules except investing in my future and enjoying my life now are of equal importance, so they do get an equal allocation. There is a summary of all of this on the blog if you're interested in reading the different levels, but they are ordered like levels. If level 1 is paid, then money flows into level 2. Level 1 being taxes and level 2 being household essentials. When level 2 is covered, then I flow into level 3, which is superannuation, and so on and so forth. And what it means is that my absolutely non-negotiable priorities are paid first and in full: taxes and living. And there's never going to be a point where something doesn't flow into living, because if I'm not earning enough, then the tax reduces. So it's a really good way to do it. And I get to choose those priorities. So let's suggest I add one of those tools of the trade, a non-negotiable business expense, then I can slot it in with equal priority with personal non-negotiables. I could slot it in even above taxes if I wanted, because it will come out of my income, will make profit, actually taxed on profit. Like, I can get fancy with that if I want to. And I did get pretty fancy with that because it all lives in an automated spreadsheet. Formula nerd alert. And actually, the biggest realization from doing all of this was that I can afford all the things I really want. Maybe not all the things. I can't afford to convert the camper van to an electric vehicle yet. But all those items, services, experiences in that personal extras, discretionary, and fun level, I actually have more often than not enough to pay for them. So currently, there's enough to pay for a cleaner, there's enough for a regular book budget and a regular stationery budget. And I really didn't actually know this before because it was just vague percentages. I have 10% for expenses. What exactly does that cover? What do I do with the 5% profit? Yes, anything you want, but is that spending? Should that be saving? Like, what is that? And where's the line between what's expenses and what's profit and what's personal? Like, that was just completely blurred for me. And actually, what happened over the past, 2.5 years was just money accumulating and sitting in accounts with basically no purpose, which is not something that you want your money to be doing. So, the problem with the percentage method of cash management, applying a percentage to the cash that comes in, they can work, yes. And cash management, yes, is super important and something you should be focused on managing. But like with marketing, like with business strategy, don't expect something to just work straight from the textbook. You need to critically analyze it. I know that sounds scary, but think about it. Reflect it through what's important to you and how you want your business, how you want your money, how you want your finances to work, and how you need them to work. If this video has been useful, I'd love you to give me a thumbs up and let me know in the comments if you've been using the percentage method, what might need to change. You can subscribe for more videos like this on visibility, imposter syndrome, and money mindset for solopreneurs. And I will say, if you need my help to own the role of being the boss of your business and take things like cash management and finance seriously, then reach out for a free chat.